Singapore has kind of made its name, and in last few years have really tried to kind of portray itself as a kind of wealth hub. So in a sense, this case has really kind of shook that image and really affected the kind of drive because essentially you have about 2 billion worth of assets being seized. Among them, more than 1 billion were found in banks. And this case where 10 basically Chinese-born individuals were accused of laundering quite a lot of money for pretty much years in Singapore has kind of really put a lot of these safeguards and a lot of the efforts to kind of attract foreign wealth into Singapore in question.
And Dexter, as Sherry mentioned, this is a city-state that attracts a lot of high-level wealth, but it's also a government that's really gone to enormous lengths to build its reputation for transparency. This is a really big deal.
Singapore has always kind of portrayed itself as kind of open to foreign wealth, and in the last few years, especially with China clamping down, you have seen that kind of wealth really grown. So you have essentially 1,100 family offices at the end of last year. That's about a 3 times jump compared to 2020. And basically that has kind of appeared on the street. So you going around Singapore nowadays, you see a lot of fancy cars on the street. You see a lot of people with fancy lifestyles. Wine clubs, for example, has been doing very well. So have golf clubs, for example. But that's kind of also driven a kind of tension because a lot of the locals obviously are also struggling with inflation. A lot of locals are struggling with high living costs, like everywhere else in the world.